roads and up in the clouds, but I've always felt that something's missing. That was until I found you right there in the crowd. You came into my life and started a fire. You made me feel like I could touch the sky. Oh, there's nothing missing now that you're my desire. Now all I have to do is to make you mine. 'Cause I know, and you know what we could be. Like a song, like a perfect melody. Baby, don't say you don't believe in me. 'Cause you know, and I know, we're onto something good. You know, and I know, we got something good.
Listen, I get myself psyched up every week with that theme song. I don't know about y'all, but if you really love that theme song, I need y'all to let me know, because my team is dynamic. They are in the background hooking me up on a regular basis, and I just love the Easy brand. Listen, welcome to Conversations with Kim. I am your host, Kim Jordan. And we have such a dynamic episode for you today. And so I need you to like, share, please comment, because we're going to deal with some of the comments from the last Money Lab today. So please blow the comments up, put it in there. Even if you're watching the replay, we will address them. But get out your pen and paper, call mama and them, your cousins, everybody, and get them involved, because something is going on, and we have a financial expert here that's going to give us the inside scoop. So without any further delay, I want to introduce to some and present to others my financial coach, Frances Smith Dean.
Hey, Kim. Hey, Village.
The Village has been missing you. Like, we kind of almost want you to come every week now. We see so much going on in the media, so much going on in around, with groceries being high and the fluctuating gas prices and the stock market. Everyone's stock portfolio is going up and down. So there's a lot happening.
Well, Kim, you know what? I'm glad that you started with the portfolios. And for everyone on the call, if you have a 401k, pension, 403b, Social Security, please listen. Probably the majority of your money is invested conservatively. Why? Because people don't like to lose money. So they move their money into bonds, correct, Kim?
That's correct.
And then moving the money into bonds, they feel like they're preserving their principal and getting interest. Here's the issue that many people are going to face. With the interest rates increasing, the bond market decreases. So when interest rates rise, the value of your bonds go down. You're losing principal. And I want you to understand that. That's why you have to take an assessment. Now, if you can, please, after this call, after this podcast, begin to look at your portfolios closely. If you look at your bond funds and you see that your bond funds have eroded or lost money, you have to have a plan of action. And the reason why I'm saying that, Kim, is because people think that when Powell cuts interest rates, that money's coming back.
And so who is Powell? Because everyone doesn't know who Powell is.
Yeah. Okay, so Powell, everybody, he's the Federal Reserve chair. Mm-hmm. So he is the chairman of all of the Federal Reserve's throughout the United States. And what happens is Powell in the FOMC, which is Federal Open Market Committee, those are presidents now. They decide the flow of money. They control interest rates. So it's not like stocks. You know how in stocks it'll go down, you hold it, and then it'll go back up. The equity will go up. Bonds are different. They're much different. And so I want the audience to realize that if you have bonds in your portfolio, you're going to have to sort of get a game plan because that money's not coming back within a reasonable period of time when you're going to need it. So you need to begin to do your assessment now and look at what to do. Like you may want to start your own IRA or your own Roth IRA, or you may have to start your side hustle, but you're going to have to mitigate that risk of losing that principal. You're going to have to mitigate it because we're going to be in uh, a flexible interest rate environment where we're going to continue with high rates. So rates are going to remain high. And because they're going to remain high, those who made a lot of money at one time and now you've lost it as a result of interest rates increasing, I'm a little bit concerned. I would like for you guys to sort of sit down with your plan advisors, talk to them, and see how you can mitigate that risk.
So you've said a lot, and for those that do not have any type of economics or financial education background, in layman's terms, yes, they need to go find out how their 401k and their pension is being invested, correct?
Correct. And the reason why is because bonds or in those 401ks, you have bonds in your pensions, okay? And because you have bonds, you've lost money. So because we're in Dallas. They invest in bond funds. They invest in bonds. So you need to see if your pension now is underwater. You need to assess to see and what do I mean by underwater, Kim? I mean this. If the pension or if your 401ks have lost so much money or your 403bs, whatever that is, you now need to make sure that you have a plan of action to mitigate their risk. You need some balancing, some leveling off.
Give me an example of that.
Okay. I had a client, she was in bonds and she lost 20,000. Mm-hmm. I said to her, move it to cash. Now, this is not advice for you. This is advice. I'm just giving you guys an example. Mm-hmm. I said, let's move it to cash. But that 20,000 that you lost is not coming back. I want you to understand that because we're in an interest rate environment that's going to increase. It's going to keep increasing. So here's what you need to look at. Doing a side hustle, or you need to look at different ways, like maybe rent a room. But you need to look at ways you're going to recapture that $20,000 loss because it was for what? Your retirement.
So if they find out that they're in bonds, what should they do?
If they find out that they're in bonds, they need to see what are some other alternative investments within their portfolio. Remember, 401ks, 403bs, those types of investments, when you're attached to a plan now, are only designed for one way in the market, for it to go up. That's what it's designed for. but they have investments. So we were talking earlier that we're going to look at international investing with the BRIC countries. So you guys may have in your portfolios international options. If you do, please have your advisors explain what are those options and what do they invest in, because the BRIC countries are going to be your emerging countries and you want to have money there, and it may help you now. It may help you mitigate that risk by you getting in early.
So let me bring some context for those who are just now hearing BRIC countries for the first time.
Correct.
That is a acronym for B is for Brazil, I
Correct.
is for India,
R is for Russia.
okay, BR is BRIC, BR Russia, I is for India, C is for China,
and
S is for South Africa.
correct. Those are our emerging countries. Why? Because it's called the law of numbers. With the law of numbers, these countries, the people would become middle class. There are over 6 billion people now. These countries their middle class is going to rise overnight, while the United States middle class is going to, decrease. Okay. So, and people say, well, why do you say that? Because the way technology is in the fourth industrial revolution, they don't need as many workers as they used to in the US. If you don't have, that's why we keep on trying to encourage you to get assets and begin to build assets. And as you begin to build assets, it's going to be important now for you to literally watch your money, especially at this time, because we're going to ebb and flow throughout the rest of the year. So, Kim, what do you think the audience will want to know next?
Well, before we move on to our next topic, I just want to make sure that you are putting your comments and questions in the comments. We will look at that afterwards. Some of the things that we're talking about tonight are from the comments from our last Money Lab. So please utilize that. And if we can't address it during the episode, we will definitely come back and either get it in the comments or our next Money Lab, because there will be another one. Our next topic, I believe we need to go into the monetary policy and just kind of learn a little bit more about that, Frances.
Okay. So there are two types of policies, everyone: monetary and fiscal. And both of them have to deal with how we spend and allocate money. But the monetary policy is our focus for tonight because the Federal Reserve controls monetary policy. It controls the ability for money to flow in and out of the economy. And the tool that they use is the Fed funds rate. That's when you raise rates, interest rates, or you decrease interest rates. So why is it important? Because everybody's waiting on the Fed to pivot. I know you probably heard that term in the media, the Fed pivot, the Fed pivot. Well, there are stages before you actually get to the pivot. So the first stage was raising rates. So the Fed has raised rates 10 consecutive times. And now they're at a slowdown. And what do I mean? They're not raising them as high as they did in the beginning. So they might have gone a point, a half a point, but now they're going a quarter of a point. So they're slowing down the momentum. So it's a slowdown. But Many people didn't think that they were going to raise the rate this past May. So they did. So 2 meetings you need to be attentive to: the June and July meeting. And the reason why you need to be attentive to both the June and July meeting,
What meeting is that, Francis?
the Federal Reserve, the FOMC, the Federal Open Market Committee meeting.
Mhm.
And that's going to be held June the 14th. June 14th is the FOMC, the Federal Open. Now, why is that important, Kim? Because what do they normally do? They're going to tell you if they're going to raise rates. Either they're going to raise rates or they're going to pause. Those are the 2 actions they're going to take. Either they're going to raise rates or they're going to pause. Now, they could cut. I'm not saying that they can't. They could cut. But I want you to know, if they cut, something's wrong. There's some trouble in Denmark, as we say. Something's going on in the economy. So I don't see them cutting right now. I see them either raising the rate 25 basis points or pausing. Okay. Why is this going to be important? Because all of the pressure will be on the July meeting. So the 2 meetings I need you guys to focus on is going to be the June 14th FOMC or the July. Now, also, I want you to really tune in to the CPI data. That's going to measure core inflation. So
What
June
is-
the 3rd.
I'm sorry, what does CPI stand for?
That's the Consumer Price Index. That's going to measure inflation, okay? So why is that important? When the Federal Reserve raises rates, it takes people out of the economy. People are going to lose jobs. And when people lose jobs, as rates go up, as rates continue to increase. So if you notice, manufacturing, they cut manufacturing. Manufacturing got hit first, guys. After manufacturing was tech. After tech was the banking sector. Now it's the public service sector, but you have administrative work. So if you're an administrative worker in public sector work, you're probably going to be laid off soon. So it's not all at once. They sort of take an industry, and that industry starts to scale off workers. And then you remember now we had COVID. So a lot of jobs didn't come back after COVID.
Right.
And so when they begin to raise rates now, this is a game changer, because now the layoffs are in effect. And what else you have to know is those jobs are not coming back. Middle America is being gutted, and those jobs are not coming back. So that's why I'm saying to you tonight, when we talked about the 401k, the 403b, the pensions, you have to do an assessment, because if you're middle America, you will be affected. 2 out of the 3 jobs can be replaced. And it's going to be replaced by what, Kim?
Robots.
Yes. Yes. And so that's why it's important for you guys to get a game plan. Now, we say the summertime is the best time. Why? Because you have the time to sort of focus and start networking, understand what other people are doing when it comes to investing. And I want you to know this, that it's nothing for you to be afraid of, but people just don't like change, correct? They don't want to change. They want things to stay the same. Well, guess what? That ain't happening. We are on the blockchain. We will be moved over. And another thing I want to discuss too, and it deals with monetary policy, July begins Fed Now. And we talked about this last session. In FedNow, that's why you're going to have your central digital bank currency. That's coming online. So I don't want you to think that I don't want you to think that change is not coming. Change is here. Change is here. And because change is here, now is the time to sit down, assess where you are financially, assess your portfolios. Now, remember what I asked you to do. Look at those 401ks, 403bs. Even if you left it there, you left it with your job, your former job, call the plan administrators. Ask them, what are some options that I have? I want to do international investing. Kim, tell them the countries you just listed.
Brazil, Russia, India, China, and South Africa.
Correct. Please, those are going to be the emerging markets. They're going to be a game changer. So while the airports are crowded, while you travel, you have fun, do a financial assessment. And as you do your financial assessment, everyone, call the plan administrators. That's what they get paid for. They get paid to help you navigate the process. Okay. And what you need to do too is get in with networks. There are a lot of networks out there that really try to do a good job of educating you so that you will be able to weather this economic storm that's about to take place. Another thing I want to say to the audience too, Kim, last time we discussed de-dollarization, remember? Now, why am I saying you looking at your plan is important? America may no longer be the reserve currency. Now, it's the best on the block right now. But as other countries begin to de-dollarize, at some point, we're going to be affected. So, what I want you to consider is this. As you move into international investments, begin to look at that. Also begin to look at other currencies. See, as Americans, we're just used to the dollar. Please begin to educate yourself about other currencies. Now, we recommend that you look at hard assets, gold and silver. But I also recommended to my group, I had them do a research project on currencies. And when you're looking at currencies, here are some things you need to consider. The stability of the government, number one. Number two, you need to consider if the country can grow its own food. Number three, you need to consider also the military. Does the country have a decent or strong military? Mm-hmm. So government, its ability to grow its own food, military.
And Francis, when you say ability to grow its own food, yes, everyone has, some measure of it, but is the majority of their food homegrown or is it being shipped in? So if it's being shipped in, right. So if it's being shipped in, that's a flag.
Correct. Because that means you're dependent on somebody else. And if somebody else has to go, if you look at Ukraine, okay, so one of the tribe members reached out to me. She said to me, I see why you had us to do that project. Because I told the group that they had to pick 4 countries and also look at the demographics of the country. If the country's demographic is not growing, that's a sign of aging. And that means that they're not going to be as productive as a country, as a growing economy. Because this is about the what? GDP, mm-hmm. Gross domestic product. See, money is the game. And it's all about growth and productivity. So when you look at the country's GDP, you're looking at it based on its demographics. Because remember now, the American lifestyle has been transported to all these other countries. I want you to look at the American lifestyle. And as you begin to research Brazil, Russia, India, China, and South Africa, and other countries, in doing this project, you must understand why it is you need to now diversify your portfolios. Understand the growth. Okay, so let me go back and let me recap on what you need to do. So remember, you're going to look at other countries. The U.S. is multi-international, so a lot of multi-international corporations have already moved. So they've moved out of the U.S. Look at Walmart. It closed stores in 26 states, and they moved to Mexico. Okay. Look at Ford. Ford has moved. So many of them have moved already. You just don't know about it because you're not reading the financial section. But you could Google and see that corporations, U.S. corporations, have moved. Okay. They moved. So
they see the handwriting on the wall.
Yeah. So they're moving. They're no longer the American consumer, they know is tapped out. And because the American consumer is tapped out, now it's time for you to what? You realize it and you sort of change your portfolios to reflect that. So when you're looking at countries, government stability is number one. Number two, military. Number three, the ability to what? Grow its own food. Mm-hmm. You understand? Because if you can't grow your own food and feed your people, that's a sign. Go ahead. There's a question.
Was there a question? Yeah, let me see that.
Where can you go to get your financial assessment done? Well, first of all, if your money is still left in your plan, thank you, Miss Rashida. Okay, so let's say you left your money with your employer. Your employer has a plan administrator. And you know how you quarterly we receive the reports? And on that, there's a number you could call, and you could have that administrator sit down with you on a Zoom call and say, look, I want to look at my current plan. I know I'm with the employer. I'm not with the employer. I'm interested in international investment options. Does my portfolio have it? I notice I'm in bonds. I lost money. And with the interest rate environment right now, it's going to be iffy. So I may want to redirect some of my money into what? International investments. But that plan administrator. So you know how every quarter we receive our documents and we just what? Put it on the side? Not this time. I want you to get those documents out. I need you to start calling. I need you to really have a talk with those administrators because you need to understand what your options are. And then here's some questions I want you to ask. Okay.
Write it down, everyone.
What happens if interest rates continue to go up? And you're in bonds now. You're in bonds. What happens if interest rates continue to go up? And then you need to ask them that question. The second question you need to ask them is this. Do we have any cash options? Meaning I could put my money all in cash until this whole economic calamity is over. So do I have any options in my plan where I can move my money to cash? And then you can make a decision at a later time. But what are you doing when it's in cash? You're preserving some of that. You're preserving your principal. You may not be getting a lot, but you're preserving principal. Okay. So moving your money to cash is another option for you. And your third option, for people who have detached service, you could roll it over yourselves and roll it into a IRA with a brokerage firm. So your first thing is to call your advisor, your plan advisor of the company that you work for currently or formerly work for. The second option is when you sit down with them, you ask them to begin to educate you. And what do you want to know? You got to understand your options. What are the options in this portfolio? Say, I'm interested in international investing. Okay. The other option is, do I have a place to just park cash until I make a decision?
Mm-hmm.
And then your third option is to roll your money over
Mm-hmm.
into a brokerage account, but you're going to do a traditional IRA. You're going to roll it over to a traditional IRA. Okay.
So we do have a lot of area to cover tonight. So we're going to put our questions at the end. But I want to turn the page and go over to this AI, this artificial intelligence, because it's everywhere. And we're hearing a lot about Chat GPT.
Oh, Kim. Woo! I don't think the American people, especially if you're middle class, realize how Chat GPT will affect your job. 2 out of every 3 Americans will be replaced by robots, drones, algorithms. And that's all embedded. Chat GPT is all embedded in there. That's why I try to encourage Americans to become entrepreneurs because that old system now, the old system is gone. That was called legacy. The legacy system is no more. Okay. If you notice today, Robinhood is going to 24-hour trading.
Yes.
Chat GPT.
Mm-hmm.
24 hours. They don't need people on the desk. There's an algorithm that's going to run the trading desk, guys.
Mm-hmm.
Okay. So I'm saying to you now, you got to get ahead of this curve. Robinhood is going to 20. Do you know what that means? That means that's a game changer for trading. If Robinhood gets there first, you know, everybody is going to just be like, oh my God, I could get up at 3 o'clock in the morning, make $600, roll over, and don't go to work that day. We're going to that type of system. And understanding what's about to take place is going to give you the edge. We want you to have an unfair advantage. We want you to have we want you to be ahead of the curve. We're not selling nothing. We're just giving you information for you to begin to what? Research for yourself.
So, Francis, you said that it would be good for people to have a side hustle or be an entrepreneur.
Yes.
But I want to put a little note on there that if you are going to do that, you really need to be thinking about international markets. Because sometimes, we tend to think, as we've always done, and think about just the American market. Well, if Americans' dollars, if our dollar is, basically in trouble, who's going to buy your product? So you have to think bigger and think broader and tap into those international markets.
I've always said to my classes that you have to become a global citizen. You're an American, everybody knows that. But now you have to become a global citizen. And the reason why you have to be, because you're going to have to now move into other markets beside the US market. Remember, the BRICS countries are rising. The American economy is falling. There are 325 million American adults. There are 6 billion. Who are the companies going after? 6 billion or 325 million. It's a law of numbers. And because the BRIC countries, the individuals will become middle class overnight. Now, I'm going to tell you, this is not something that's going to happen 10 or 20. It's going to be overnight within this decade. 2024, 2025, boom, we're going to see the rise of the BRIC countries.
And so, it's kind of hard to even picture because all of our lifetime, the dollar's been number one.
Correct.
But what we don't know, some of us don't know, is that the dollar hasn't always been the
world reserve currency.
The reserve currency. And so just when we were born, now we over here cabbage patching and stuff, and everything is wonderful for the United States. But there is a rise and fall of every nation.
That's right.
And so we came to the top, and we was living large, doing stuff, and making it rain and do all that. But now we're in that down spiral, that downhill portion of it. And once we get to the bottom, like she said, overnight, listen to me, you will wake up and for example, your $100 will be worth $40.
Correct.
Because that's all they will be able to buy. And
correct.
So I just went to your purchasing power. So I just went to Walmart just the other day, $50. I had 3 bags. And they weren't full.
She took a picture.
I took a picture and posted it. 3 bags. And my bags weren't even full. So, that means that we are still going down. And ultimately, those 3 bags could be $100.
Correct. Right. And here's the thing, guys. Deflation is coming. We're going to have a deflationary spiral in America. What do I mean by that? Okay. Right now, we're dealing with inflation. Everybody understand that. That's high prices. High prices is like having a tax, just like Kim said. She paid $57 for something that should have cost her, let's say $20, $25.
At the most.
But inflation did that. It robbed her of her purchasing power. Why is it robbing her now? Because at some point, the system doesn't want Kim to have that excess money. Deflation will come. We'll have a deflationary spiral that's going to come in. Now, because she spent the $57 today, she would have what? Had to have saved something in order to spend it later. Now, that gap, that difference between $57 and that $25, the actual price it should be, that's the part she should have had for later. Okay? Why? Because in deflation, things get cheap. So, Kim, let me remember what I told the tribe the other night. I said, guys, have 1 year of your operating income, or what you spent for 1 year, have 1 year of your salary in cash. 1 year. I want you to have 1 year.
And that's if you spend your salary. Like some people live check to check. So they spend their salary. Everything they make, it goes out every year. Every month. So you would want to try to figure out a plan to stack at least that amount on the side. But for those of you that are living below your means and living a more modest life, you want to have at least your bills. So I know, let's just say my bills are $1,000 a month. for
Right.
12 months, that's $12,000. I need to have at least $12,000, on hand.
Correct.
So that's kind of explaining that in a easier
And
way.
right. You're right. And also too, in having that money in cash, when deflation comes, you're going to get more bang for the buck. That's what I'm saying. Have that cash on the side. Because when that deflationary spiral comes, it's like midnight sale. You could now, with assets and home prices, and here's how we know we're going to have a deflationary spiral: banking crisis. We're in the midst of a banking crisis. And because the banking crisis is like blood running through the American economy, we're going to see maybe, I would say, 10 banks left standing, 10 to 15 at the most. The banks we know today are not going to be. Why? Because those banks are in trouble because of the bond market. The bond market has caused the banks now to have what is called this credit crunch, where they're underwater, and then depositors are doing what? Losing confidence. So when the American people begin to lose confidence in the US dollar, you're going to see a big revolt in the United States. As long as we have confidence in the dollar, we're good. But once you start seeing a lot of Americans lose confidence, guys, we're in trouble. We're in trouble. Go ahead.
No, I kind of want to tackle one more topic, and then we can kind of recap a little bit.
Okay.
But I wanted to kind of tilt over to the debt ceiling and kind of give me some information about that. So listen, everyone, we're giving out a lot of keywords, and I want you to be able to, if you're not capturing them now, come back, watch again, get these keywords, do your research, let GPT, give you a little summary on it, and begin to understand this stuff, because we are in for a ride, and
yes,
this is part of the preparation.
We are in for a ride, and I'm glad you phrased it that way, because most people don't understand that we've never seen this before. Audrey, my assistant, she says, Ms. Francis, we don't even know how this feels. You know what I'm saying? We've never experienced this before. And because we've never experienced before, that's why I tell the tribe, we need each other. Whether you like it or not, we do need each other in so many ways. Because if we don't foster that sense of community, we're in trouble. We have to fight this fight together. We're going to have to walk these lanes together. If not, we're in trouble. See, it's no longer every man for himself. It's the pie is going to be there, and we have to decide how we're going to slice it. Now, get into the debt ceiling. I want you to do me a favor tomorrow. Call your congressmen and your senators and ask them to raise the debt ceiling. Why? Because the American economy is on the brink of collapse. Yes, I know we don't have things fixed. Yes, I know we got, $30 trillion to deal with. But we're going to have to get a solution, and we're going to have to buy some more time. And having the debt ceiling, having America default is not a good thing. Here's why. If you have people on Social Security, they will not get a check. If you have people who work for the federal government, they will not receive a check. If you have contractors who work for the federal government, they will not receive a check. So the best thing you could do tonight, call your representatives. Again, go to your representative, say, come to some terms of agreement on the debt ceiling in order to save America. And I'm saying this because I'm not saying we're not in trouble, but it's going to buy us some time. And how this plays out is going to be important because of the fact that major layoffs, major cuts are going to start happening, but it just buys us time to, I think, about August. So it's going to buy us some time to like August, September. But we need to get behind the debt ceiling because policy is at stake. And we need the lawmakers to work on policy right now. Policy, U.S. policy is at stake right now. And we don't need them distracted. We need them to focus on what's at hand. So please call your representatives because many of you all throughout the United States, we need you to call them. And we need you to say, come to some agreement to raise the debt ceiling so we can save America temporarily. Because we do have some major cuts now. I'm not saying that. I'm not saying we have some issues, guys. We got a lot of issues because we're in the middle of a banking crisis. And I would hate for us to default and then you can't swipe that debit card and get any money. See, it's a trickle effect. It's a Doppler effect with the debt ceiling. It's a Doppler effect. And because it's a Doppler effect, I'm concerned. I'm concerned right now because we need them to sort of focus on other things.
Kim? So, Francis, what are some tips? I know that, we need to be paying off credit card debt and just getting that out the way. I mean, these interest rates are just, really crazy and stop paying just the minimum amount. Perhaps even finding a 0% card.
Good.
That will be 0% for 18 months or whatever. Now, the way I say it, the way I learned it when I used to sell cars, you got to pay on time every time, right?
Amen. Amen.
So if you get that low interest or that zero interest credit card, you transfer your balance over to that. That gives you 12 months, 18 months of no interest. So that's when you can kind of like just knock it down. We're in a time right now where a lot of our stuff that we have that's, cable and, we got all the packages and, we eating, stuff that we really don't need to eat and just different things that a lifestyle that we've developed.
Correct. Now we're not saying you got to have a healthy lifestyle. I drink essentials and a friend of mine, he always says, woo, you drink that expensive water. Well, I like essentials as alkaline. So, and it is expensive, but that's something that is healthy. It's good for me. It's a part of my health, my whole wellness now, but things that you don't have to eat out every day. You understand? You could prep your meals at home. You don't have to run to the shopping center and spend every weekend. You understand? I'm not trying to say don't do anything. We're just trying to say be prudent and have some wisdom. You're going to have some wisdom in these times because these are different times and that we're coming into. And also realize this, that as times change, people do too. You got to change. I used to encourage families. My girlfriend, I encouraged her family. I said, y'all should live together. I encouraged the family. I said, y'all should start an investment club. But, I don't understand. You guys, if you say you love Jesus and y'all be calling on the Lord, you got to love each other. And in loving each other now, You got to look at ways that you could come together to build.
Yeah.
You
Even
got to come together to build.
generational living. I remember, years and years ago,
Mhm.
everybody stayed in the house. Big mama,
Yeah.
grandmama, your mama, you, and then if you had kids, then they was there, and
Yeah.
everybody stayed, pulled their weight, and that's the way it was. But it allowed you all to have wealth.
Correct. When I grew up in middle class Black America in New Orleans in Pontchartrain Park. And, my parents took on their nieces and nephews. And the goal was you could come live with us, but you had to go to college. You see, you could come, live, stack your money. And my parents allowed for my cousins to do that so that they could what? Have a leg up. So when they did decide to move out, they had something to leave with. I'm encouraging my children the same thing, especially my youngest. I said, you need to have something before you leave the nest. And I know our case manager, she's doing the same thing. Look, folks, we have to do this together. We have to look at things a little bit differently, and we're going to have to work together. We've gotten so narcissistic in our behavior, and we've gotten to the point where we don't like each other anymore. And that shouldn't be. That really shouldn't be. We gotta work together. We just don't have a choice. We gotta work together. Go ahead.
So listen, everybody. Frances has said a lot tonight. And she is giving out this information and not asking for anything in return. That there is no catch.
Right.
We want to empower people. Yes, we would love for you to take heed, but we want to empower people. So I took my glasses off, but I can't even read what I wrote now. So y'all stay with me. Don't come for me. Okay, so she said that if you're going to call your person that has your 401,
Right.
ask them about the rates. What happens to your portfolio if your rates go up?
If the interest rates go up, if interest rates keep on going,
if interest rates continue to rise, and they've been rising for the last year, ask them about options to move to cash. Is that is there a time that you can do that? And then find out if there's a way that you can roll over to an IRA. You just need to know your options. Nobody's saying for you to give it to do it. We're saying these are options. And if you lost money the last time that the market crashed, then you need to be trying to have these conversations and watch your money. The time is over for letting someone else manage your money and you not know what's going on, right?
That is correct. Yeah.
And she gave out a lot of vocabulary words: de-dollarization, CPI, Fed now, which is a big one, BRICS nations, BRICS for Brazil, Russia, India, China, South Africa. Bonds, are you in bonds? Talked about the monetary and fiscal policy. And so these are things we talked about. AI, Chat GPT. So there's a lot that was discussed tonight. And I really want you to take advantage of this information, educate yourself. If you have questions after you've done a little bit of research, come back to the chat. We'll still be monitoring. And if you don't get a response, in a timely fashion, we do have a job. Then please, tag us in there and to make sure that we see it. And either we can address it in the chat or we can address it during the next Money Lab. But Frances, we have about 5 minutes left. What else did you want to add tonight?
Let me add. Someone asked the last Money Lab. This is what they asked me. They said, "What happened if you're poor? If you get an income tax rebate, income tax check, then use it wisely. Mm-hmm. That's not the time for you to go out and buy furniture. That's not the time. You understand? You got to use this wisely. Now, here's my next thing to you, because I know a lot of folks who say they're broke and poor, and you go in their closet, they got Louis Vuitton, red bottoms, right?
And you see their hair and their nails or
Thank
whatever, belt and shoes or
Okay.
sneakers or, because I don't want to just come for the women. I'm coming for everybody.
Okay. Sell it. Sell it now while what? People have money. Sell it. But you know what? You're so materialistic, you don't want to let go of stuff. Sell it.
I need some tea for that. I wish I had some tea. This is cranberry
Here's
juice.
somebody said, what should we do if we don't have any of the assets investments you mentioned? Okay, let's start with the first thing, education. I want you to educate yourself on the types of assets. First, hard assets. That's going to be gold and silver. And you need to know how it works in any economy. You got it? So you don't want to just understand how to purchase it. How does gold, and ask Google, how does gold and silver work in any economy? Inflationary, deflationary. Then you need to also look at stocks. All stocks don't work the same. All stocks don't operate the same, because there are stocks domestically, in technology, in medicine, in utilities. There are 11 sectors.
And there's group stocks,
ETFs.
ETFs.
Okay, and I'm not going to forget about bonds. Bonds are going to have some value at some point. Bonds will have value if the inflationary bonds, the government sells inflationary bonds. Bonds will have its place. I'm not saying it won't. It will have its place. But what I am saying is currently bonds are having challenges because why? Interest rates. Every time they raise interest rates. So interest rates have two effects: the bond market and the employment sector. So when they raise rates, boom, people lose jobs.
Okay, so Francis, we have 3 minutes left, right?
Okay.
And so for the person who does not have 401k,
Right.
and they don't have any assets, they are hearing this for the first time. How do they get prepared for what's going to happen in America?
Start saving. Start saving that. Start saving cash. Start educating. Start with those two things: saving and educating. And if you could do that, then the rest will come. Okay? Kim?
Okay, perfect. I do know that there's a demographic of individuals that we just didn't have this information. And if you weren't in economics, if you weren't a person that was involved in the global markets, you didn't pay attention. You was watching Scandal, like the rest of us, right? So
I want Scandal too, but I'm just.
I understand, but that's your passion. You've been in the financial industry.
Yes,
and for those of us that haven't, we was watching Scandal, and then we went to bed. So there was no financial input. But we are so grateful, Francis, for you being here.
Oh, thank you, Kim. Thank you, Village. Thank you. We love you.
Yes. I just want to make sure that you all use those comments. I mean, just because we're going off to air, I still want you to use those comments and put whatever you need to have in those comments, so that we can go back and help you wherever you feel like you need some assistance. Listen, next week I will not be here. We will be taking a small break just for 1 week. I have some business to take care of, so I won't be here next week. But after that, we'll be coming back strong. Please like and share this video, and just take the link, everyone, and send it to individuals that have an ear to hear, because everybody not going to hear, and it's okay. I've learned that it's okay that if someone does not take the information, right? So please like, share, and hopefully they will listen and get themselves together so that when this downturn happens, they'll be ready. And so, like I always say, set yourself free. Spread your wings, because it is time to soar. We are going to get through this together. All right. Thank you all so much for joining. Love you much. Bye-bye.